In this video, I want to zone in on one specific currency, the US dollar against the Swiss franc. And if you're wondering what side of the market to take, well, this is something for you to also consider. Now, as always, this is not financial advice. This is just me running you through my opinion and why I think that opinion is very, very valuable. So without further ado, let's just head right into it. Firstly, before I even look at all of these things on the chart, let's head straight into the fundamental situation of the market. Now, in terms of financial or rather interest rates differences, we have the US dollar at 3.75% and the Swiss franc at 0%. So basically, this is a safe haven for save your money. The Swiss franc is a safe haven for save your money if you don't want it to lose value. The US dollar is if you want to gain value, even with the current risk, kind of put your money there. And we all know investor who wants to invest right now and make some money will definitely take it to the US dollar than the Swiss franc. The rest money on the Swiss franc is more like saving cash. With that by the wayside, let's see what's going on regarding the US dollar and the Swiss franc as a pair, right? As a pair. And in the recent 14 days, I'm just going to quickly skim through the whole thing instantly because I don't want to go through everything. Now, overall, it's flatlined, but in the recent 14 days, we've seen far more power to the US dollar. Now, this is because the Swiss franc has not released any news very significant in the last 14 days. In terms of pair value, the key value, it is quite neutral, more a little bit to the dollar side. Now, again, looking at the high impact news, right? High impact news on investing.com, we have that the leaning towards the dollar, but still neutral. We have a completely neutral 14 days news. Basically, both of them have not really had much differences like that. And then the key data for the high impact data alone is at 59.3. That's another leaning more into the US dollar end of things. Now, with all of this, it seems like buying the US dollar seems a little bit better than buying the Swiss franc, slightly, just like should I call it extremely slightly, just one small-ish chance better. But what do we see on the chart for real? Let's look at the chart. Now, what I have here is a supply and demand zone alongside a 50 and 20 SMA. Don't overlook at it. It's not something huge. It's just so that we can determine where extreme supply and extreme demand zones are on the charts without having to constantly draw them out ourselves. It's a simple indicator I created for myself. Now, what we have here is we see clearly, you can see that supply zones have been holding out for years. This is the monthly time frame. And in recent times, what we see here is supply zones seems to still have been holding out real strong. However, one thing about the market is we always have this thing called break and retest. Price breaks out and most likely comes back to retest. Not all the time, but it most likely comes back to retest the demand zones it has been breaking. As you can see, if you look forward in time long enough, you will notice that whenever it breaks a zone, there's a high tendency it comes back there. And if you look at that same scenario right here, we've broken out for a while and it seems like we're beginning to come back. Why do I say so? Now, studying the last sets of candles on this chart, we see price bottomed out down here and we've started seeing strong move to the upside, thereby cancelling out the evident highs here a little bit. So we are seeing small high cancelled out a little bit and we're still seeing some struggles to go above other highs. We may see continuation to the downside immediately, but let's see what the lower time frame says about that. Heading into the weekly, what we see here on this chart is, well, similar situation. We have the supply zones holding up better than the demand zones. You can see even the ones that are cancelled out by just small wicks, majorly wicks, not actually small. They're not small. They are very heavy time price movements because on the weekly. Now we see those cancel outs rarely hold and price continues to decimate the demand zones. However, what we also notice here is we're still having a not so far away supply zone up here and a demand zone right here. Now, price has retested this demand zone and most likely continue to the downside. That is the overall view. But looking at the last sets of candle again for the weekly, what we see here is price made a very clear high and seems to be going down. Mind you, there's also a supply zone here, but it's not an extreme one because there's a clear extreme one behind it. And also the way this calculator works is it looks at the last 5 candles. So if this point is not extreme in the last 5 candles, it doesn't mark it. So it looks 5 candles behind, 5 candles in front. And if you count behind here, 1, 2, 3, 4, 5, you can see the 5th candle is way above this high. So it doesn't see this as an extreme zone. Instead, this is already an extreme zone. Same thing for the bottom. You can count 5 candles left, 5 candles right, and you see why this is rated as the real extremes. Now, but then again, there is a demand supply zone here, that's for sure. Now, that supply zone got mitigated and price seems to be running out of that supply zone. So there's a higher tendency on the weekly for us to continue seeing a bearish move. But moving on to the daily time frame, let's see what the daily time frame has to say about this move. On the daily time frame, we have price literally showing that pullback. You can see the pullback. The pullback shows the supply zones getting decimated and demand zones being respected. However, we just went through the last demand zone. And what does this stand for? Well, we may be seeing price move at most a little bit upwards before it starts to push downwards. Now, this is technical based, and remember, fundamental is saying there is slight chance for the US dollar. So that means the slight move up is that slight chance, and depends on what news release happens and economic data comes out, we may see price bust above. But currently what I only see is I see price coming up to the upside a little bit and then pushing downwards. This is supposed to be an extreme zone. However, we have zones behind it, and mind you, we also have supply zone up here, right here, a very good supply zone and an extreme one waiting at the top. So what I see is I see price making its way all the way up here. This one is most likely. So when I say most likely, I don't mean it's bound to happen. I'm just saying most likely to happen, right? Price most likely would come up here and at most would find its way up here. But the most probable thing to happen is seeing price come into this 0.79 levels before we start to decide if it's going downwards or if it continues to an upside towards the 0.79 towards the 8.8 levels. So that's the first thing I'm saying. Now, looking into the specific candles, and this is how I analyze the charts personally, right? Looking into the specific candles, what I see is price bottomed out down here after crossing through the demand zone, and this just means one thing: we're just having a correction, a slight correction to the upside before we see that pullback. Now, yesterday being Friday, price did not close below this low, the previous day's lowest low actually. So this means there is a tendency, if we see price start the next day and shoot below this band, then we have a very strong sell reasons to reason to continue to sell to the downside. But if we see that price sweeps and starts to move up a little bit, then we will certain our movement is still to the upside for correction. And this all says one thing: it's still correction as far as we're concerned, not a real move. The real move is to the downside. The up move is more like a correction move. Now, looking at that perspective, what do we see on the 4 hours time frame? Well, on the 4 hours time frame, we see price decimating, or rather mitigated and crossed through a supply zone, just like I expected, right? Just like we said, we see price made the normal thing we expect as change of characters, right? The change of character down here, and kind of making that move to the upside. The first zones we see here are the zones around the 791,792s. This is the 0.791792s are the first zones we see here for price to move up to before it runs out of power. And if it goes beyond that point, then we are looking at the 0.799798 zones, which is around here towards the 0.8 zones before price starts to pull to the downside. But there's a higher tendency for price to pull to the downside at any given point in time, especially around this 0.79 and 792 zone. That is where we expect price to start to really push the most. Currently, when I say the most, like the current most probable thing price can do is to push down from that level. So this is it for the US dollar Swiss franc. It's a very short video, like I said, and if you enjoyed this very short kind of deep dive into this particular currency, do well to drop the currency you want me to look at below. Another thing is I notice a lot of you guys watch, but very few are subscribers, so do well to hit the subscribe button so you get informed when new videos come out. By hitting the notification bell, that will also work for you. If you want other currencies, like I said, do well to drop it to the comment section below and then tell me your own perspective on the US dollar Swiss franc. Maybe I may be wrong, I may be right, but this is again my personal analysis of the market. And what do you think about it? See you in the next one.